Hello, my name is Robert McDonald, and today I'm going to talk to you about the importance of adapting to trading conditions as a pool manager. Right now, what you can see on my screen is our audited historical track record. And you can see a lot of dips along the way, and this is normal for trading. Why do these dips occur? Usually because algorithms are built for a certain kind of market condition, and for whatever reason, the market does change. And sometimes it's better just to take no action whatsoever. Other times the change is significant enough to where the pool manager is going to want to go ahead and go in and make some adaptations, basically change the portfolio somewhat. Now, as you can see here, the beta has been running since August of 2020. So we have quite a bit of trading history here. In the last video I made, I was talking about September, which was the worst month on record as far as monthly performance. It was nearly a 10% loss. And I believe I released the video before October even started, but I already had some ideas as a pool manager of what needed to be done in order to adapt to what happened in September. And basically what happened in September was the market, its personality changed. Volatility increased quite a bit. A lot of scalping strategies weren't having any success whatsoever, and momentum and breakout strategies were doing quite well. So what I did in October was to reduce the amount of exposure we had for our scalping strategies and also allocate more resources towards breakout and momentum. So I didn't really necessarily turn on or turn off strategies. It was more just shifting the allocation towards something that was going to perform better in these market conditions. So that adaptation worked very well in October. We actually had 11.73% return, which is fantastic. So going from almost a 10% loss to over a 10% gain in a month's time, it's exactly what you want to see. In this month in November, so far we've been flat. We're halfway through November, but things have been flat. The equity curve of our current setup is going to be a little bit different than we've had in the past. In the past, we've had periods where, like, look at this, really smooth equity curve. And that's typical if you're running scalpers, and those scalpers are finding success because really the risk to reward ratio with a scalper is set up to where it's going to have a lot of consistent small gains. And then if it doesn't work out because of a volatile movement or something like that, a stop loss is hit, you'll get a big crash. So steady, then crash. Now with momentum and breakout, it's kind of the opposite. So you're going to have consistently a lot of losses because the stop loss is very close to the price action when they're triggered, and the objectives are usually kind of like home runs. What you'll get is a lot more of a choppy track record. Generally speaking, on most days, you'll lose money running momentum and breakout strategies. So, but the days where you do make a profit will be much larger than the loss. And so, as you can see in November or in October, we did have some choppy performance, but we ended the month over 10%. So, you know, that's fantastic. In November, it's kind of been the same, but we haven't had that a really big successful day where we just hit a home run and made 4 or 5% in one day. Get used to seeing more chop, but then again, also be prepared for having days where you look and you're like, oh wow, that was a huge win. And that's the nature of breakout momentum trading strategies. So I wouldn't be surprised at all if in November we have a really strong close. And the same thing with December, because I feel like the market is on edge. I feel like there's a high probability that we're going to have breakouts with either the pound, the yen, the dollar, the euro. All of these currencies I feel like are under a good amount of stress, and any kind of information regarding inflation or their central banks making a statement could trigger a breakout to one side or the other, and that would hopefully make us a very nice profit. Wanted to give everyone a quick update from my perspective as the pool manager. This is our track record year to date. You know, it hasn't been as profitable a year as I would have liked in 2022, but then again, we are profitable this year. If you look at equities, cryptocurrencies, they're down for the year for sure. Hopefully we'll finish November and December strong, and the yearly total for 2022 will be higher than break even. I mean, we are higher than break even right now, but it would be fantastic if we could, close out the year with maybe a 30%, 35, 40% return on investment. Anyhow, this is Robert McDonald signing off as the Gain Pool Manager.